And transaction by transaction calculations have different impacts depending upon the industry. I'll give you an example of one that we worked on recently where the company had 100 million of export sales. They took 4% of sales, and they've been taking 4% of sales year after year after year after year after year. They brought us in like 3 weeks before the disc was released. We went through the calculations, and we actually calculated 17 million.
As opposed to 4 million.
As opposed to 4.
Yikes, that's a big difference.
It's a huge difference.
Good morning, Brian. Welcome to the podcast.
Hey, good morning, David. Good to be here.
So I now refer to you as the Bob Hope of the podcast because I believe that Bob Hope holds the record for the most appearances on the Johnny Carson show. So that's why you're like the Bob Hope of the podcast. You have more appearances than anyone else with today's appearance.
That's good company to be in if you're of a certain age.
Yes. And I'm not even sure you and I are quite old enough to even be of that certain age.
I probably never saw him on Johnny Carson.
Me too. So this is an episode that was requested by a CPA of one of our clients who was retiring, and he had a new partner taken over. And he said, "Hey, Dave, can you send over a link to the episode that just goes through all the details of the IC disc from start to finish?" And I'm like, well, we don't have that episode, but it's a great idea. So that's what's behind this. So let's start at the very beginning. Somebody calls you up and says, "Hey, Brian, I need an IC disc," or "I want an IC disc." What's the very first step?
Very first step for me is to say why.
Okay.
Tell me about your business.
Okay.
Do you have qualified export receipts? Do you have qualified export property? Those are very complex areas. And some people might think they do when they don't, and others might think they don't when they do.
Okay.
And more likely than not, they heard about IC disc from somebody they met at a business leader reading or something, and somebody said, "Oh, hey, I have an IC disc. You should have one."
Okay.
And not everybody can utilize one, but there's many out there that can utilize them that do. So,
okay. And do you charge anything for that consultation?
No, because to me, it's just a fact finding.
Okay. So
So
step one, figure out if their fact pattern warrants having an IC disc.
Right. Well, it's actually, that's one step. If we determine that, yes, an IC disc makes sense because they do have qualified export property, they do have qualified export receipts, then we have to talk about volumes, because if you have 500,000 of export sales, more likely than not, the disc isn't going to make sense.
Economic sense. When you factor the costs.
You're right. There's not enough benefit to offset the cost at that level, most likely. Of course, it depends on what it is they're selling.
Sure. Do you have a rule of thumb you typically use? Is it like 3 or 5 million where it typically makes sense, or
for most businesses, that's sort of the range where it starts to make sense, but there are always exceptions.
Sure.
So like I had a client that had 600,000 of export sales, but their bottom line profit was 80%.
Okay.
So in that instance, it made sense. But for most companies that have 600,000 of export sales, it probably doesn't make sense.
Okay. So let's say they have 5 million of exports, good margins, looks like it makes economic sense. What's the next step then?
Well, then we talk about what is the tax structure of that exporting company. Is it a flow-through entity? Is it a C Corp? And how is it owned? Sometimes it's owned by a foreign company. That makes things way more complicated.
Okay.
Sometimes it's owned by a combination of different shareholders, some of which are individuals, some with your corporations. So that can be complicated. And sometimes it's just a pass-through entity that's owned by, say it's an S corporation that's owned by a family.
Sure.
So you can have a lot of different fact patterns, and that will dictate a lot of things with respect to how the disk is organized.
And might that also be the time that you inquire as to whether multiple disks might make sense for their structure, or do you typically just focus on kind of getting the initial disk in place and then exploring that over time?
Probably the latter.
Yeah.
Initially, the goal is, do you have enough activity? Do you have the right kind of activity? What kind of benefit is it that you think we can get for you? And then, okay, if the answer to all those are in the positive, then it's like, okay, how should this disk be owned based on what we're trying to achieve? And where should it be set up? Because that also can have a lot of negative surprises if you set it up in the wrong place.
Yeah. So let's say, and I think there are some rules of thumb, like if the exporting company is a C corp, you typically don't want the C corp to own the disk. Is that correct?
That is correct, and that's because a C corporation pays tax on a dividend it receives from the ICDS. So effectively, there's no benefit.
Okay. So with a C corp, typically it would be the individual or individuals that
the shareholders typically.
Yeah.
Possibly a management group could be involved as well, but typically we're talking about the shareholders of the C corporation.
Yeah, and the shareholders of the disk do not necessarily have to mirror the shareholders of the C corp, right?
That is sort of up in the air. I prefer that to be the case, but it doesn't have to be the case.
Yeah. Like in a simple example, say it's a C corp owned by one person, and when they set it up, they want to add a couple key employees to it.
Yeah, that's probably fine. There's some old revenue rulings out there from the early 1980s that have a bad fact pattern, which the IRS held that the structure created gift tax issues. But that was like a mom and a dad and a son and a daughter. Mom and dad set up a disk and then gave the stock to the son and the daughter. And so that's a bad fact pattern. What you described is a completely different fact pattern. There's no donative intent in that.
Yeah.
In fact, I have a client that started out where the disk and the C corp did have mirror ownership, but over time that has changed dramatically. But still, there's no donative intent because we have all these unrelated families that own shares in the company, in this company. And when there have been redemption opportunities over the years, they have the choice: redeem the disk shares, redeem the C corp shares, redeem them both. So some have kept their disk shares, they've gotten rid of the C corp shares, and vice versa. But really, without the donative intent, plus some court case, precedent, I'm not so concerned about that issue.
Okay. Now let's switch gears and let's say it's a flow through, an S corp partnership, et cetera. Do you typically want the individuals to own it in that situation? Say the company has 3 shareholders. Would you just make them the 3 owners of the disk?
More often than not, no.
Okay. And why is that?
Because you get the same benefit by making the disk a subsidiary of the S corporation without some of the extra complexity associated with having the disk be owned by the shareholders. Now, that's preferred, but there are also situations where that doesn't make sense.
Okay.
So let's say the S corporation is in California and the shareholder lives in Texas or Florida or Nevada.
Okay.
Or they might want that dividend income flowing directly to them. so that there's
Oh,
no state income tax on the dividend.
sure, sure.
Okay.
Okay.
So, yeah. So again, it's just another fact you need to uncover in the process of trying to figure all this out.
Okay. So you've met with the client, you've figured out a disc makes sense, you've dug further, you figured out the ownership structure of the disc that makes sense. So then I guess you have to figure out where to incorporate, huh?
Yeah, and that again, there are good states and bad states.
Okay.
Some states won't tax an IC disc as a regular C corporation. You want to avoid those states.
Hmm.
Some states don't have an income tax at all, and those are good states to deal with.
Okay.
And I'd say there's 3 states that are predominantly viewed as positive, and that would be Delaware, Texas, and Nevada.
Okay.
Uh, they're all fairly similar in terms of annual requirements for filing, and none of them have a corporate income tax on the disc. So that's all good in terms of not adding additional costs to the structure.
Okay. So I'm in Texas, and thus, it seems like most of my clients end up incorporating in Texas. So, do you just, so here we are, January 8th, we're recording this of 2026. So you just get around to doing it anytime before the end of the year, and then you could use the disc the whole year? Is that how it works?
It's not how it works. It's generally a prospective opportunity. So you want to get that entity formed as quickly as possible.
Okay. Yeah, I've heard people say that if you don't do it on January 1st, you just have to wait till the next year.
No, that's certainly not true. From any date forward that you set it up, you can certainly get benefits or shipments made
Okay.
that date. Well, one other item that I forgot to mention earlier, they also like to ask if the related supplier entity, which is the exporter, if they're an accrual-based company or a cash basis.
Ah,
That's
okay.
an incredibly important issue that
Sure.
needs to be dealt with as well,
Okay.
as the disc is an accrual-based taxpayer by default. So,
Yeah. Okay. We'll get into that when we get further down
okay.
I think about when I was a kid, there was a Saturday morning TV series, I think called Schoolhouse Rock. And one of the episodes was how a bill becomes a law. And there's the whole steps.
Episode everybody remembers.
Yep, yep. So everybody our age, at least. Okay, so you've got the disc set up, and say you do it in Texas, and let's say they make the decision January 8th. Takes a few days to just kind of get stuff, information from the client set up, and let's say you get it set up January 15th. So then they're good to go, huh? They can just start using that disc, and away we go. Anything else that has to be done, or is it that simple?
On the surface, yes, that's true.
Okay.
But beneath the surface, there's other things that have to take place.
Okay. What's the next thing that has to happen after you've formed the disc?
Well, there's a 90-day window to file a disc election with the IRS. That's probably the most critical thing that has to happen. You have to file an actual paper form with the IRS to elect disc status for the company, because the company, when you set it up, is just a corporation. Without that
Okay.
election, it's not a disc.
And that election is just the famous Form 4876-A. Is that said election?
Famous or infamous in some cases, yes.
Yeah. Okay. So you have to, so you just, you just go to the IRS website, download the form, send it in, bing, bam, boom, you're done. You're good to go.
Not exactly.
Okay.
That's the
You
first
skipping a
step.
step.
That's the first step. But first of all, when you're setting up the disc, you have to make sure you incorporate it properly.
Okay.
Kind of glossed over there.
And what are some of the elements of proper incorporation?
Well, for example, when you go to the Texas website or any other Secretary of State website to organize the company, because it can be done all online, like the default is always, no par value stock. Okay?
Right.
If you just select the default, you're going to have a problem because
Okay.
this rules require, par or stated value of $2,500 on the issued and outstanding stock of the DIS entity. So I had a client that came to me years ago. They had set up a company in, well, they used Wyoming, which is also possible to use, and it's not a bad jurisdiction. And he had his quote unquote friend that who's an attorney set it up for him. And there were some issues with the disc election, and it went back and forth. And then ultimately I took a look at the articles of incorporation, and it had, $1 par stock, 1,000 shares.
Ah, that's a problem.
Yeah. So no matter what happened with the disc election and the back and forth with the IRS, the disc election was ultimately never approved because the entity didn't meet the requirement of having enough outstanding capital stock. So you have to have one, and it can only have one class of shares. So there are some hoops you have to jump through in terms of not doing things incorrectly or doing things correctly. So you have to make sure there's one class of stock, $2,500 par value. There can't be a foreign sales corporation in the same control group, which years ago was a big deal, but now it's not really a big deal because those have been gone for many years. Almost nobody has one left. So not really an issue there. And those are the formation matters that matter, that are important to make sure you meet when you form the entity.
Okay.
If it's formed wrong right from the get-go, you have a problem. If it's formed correctly, then the next step is, yes, file the disc election.
But before you file the disc election, there's a step we're missing, right? Doesn't the disc election require to put the corresponding EIN for the disc entity?
Yes. I mean, I just assume you obviously have to apply for an ID number for the new entity. That does not come automatically with the incorporation because that's done with the state as opposed to with the IRS. So yes.
Yeah, and that's become more challenging. It used to be pretty easy to get an EIN. You could apply under a corporate name or
yeah, but there is an online portal with the IRS to get an EIN for a domestic company. So it's not
yeah.
it's not terrible.
Yeah. So you have the EIN that you need for the 4876A.
Right.
You have 90 days.
You have the proper capitalization.
Yeah.
And you figure out who's going to own the disc because the disc collection is signed, it's not just made by the disc entity. It's made by the disc entity and then consented to by the shareholder.
Mm-hmm.
So you have to make sure that all of that takes place. I can't tell you the number of times where somebody filled out part one, the disc signed it, and the shareholder forgot to consent to it. And if you don't do the 4876-8 correctly, you're going to file timely. It's an extremely expensive fix to try to get that rectified.
Mm-hmm.
Generally, you have to try to get a private letter ruling, which will grant an extension of time to file the late disc collection.
Okay.
And that's an expensive process. It's a $25,000 to $30,000 exercise to file the private letter ruling. Plus, you have to pay a user fee to the IRS of $10,000 to $11,000.
Wow. Yeah, that seems inconvenient at best. So
And for most companies, they're better off just setting up a second disc
sure.
as opposed to
Yeah.
process. How much volume there is.
Yeah. Yeah. So, and I understand the IRS itself refers to these as a paper entity. So I guess since it's a paper entity, that's it. No need to fuss around with a bank account or actually having to capitalize it with actual money, is there?
It's recommended, but you're right, it's not required. There's no
Okay.
requirement in the disc rules to set up a bank account.
Okay.
So it could simply have a receivable for the capital stock, and that could be its working capital. Doesn't have to have a bank account, but that's sort of a misnomer that people think it must have a bank. In
Okay.
the original regulations, that was a requirement, but when the regulations are finalized, the requirement was removed.
Okay. But practically speaking, you probably want a bank account.
Yes, practically speaking, it makes all the sense in the world to have a bank account, a non-interest bearing bank.
And why is the non-interest bearing important?
Well, it has to do with one of the annual requirements of the DISC that 95% of its receipts have to be qualified export assets. I'm sorry, receipts. And so let's say in a year, the company decides, because you can't always decide not to use the DISC, even though you've got it in place. So let's say the company says, well, we're not going to use the DISC this year. We had a loss in our business. There's no benefit to use this.
Okay.
I would say, okay. And then this bank account earned $1.50 of interest income
Okay.
a year. Well, 100% of the receipts are now not qualified receipts.
Okay.
Income and no other revenue. If there was a non-interest bearing bank account, it would just have no receipts, and then it would be fine. But the earning the $1.50 of interest would disqualify that.
Okay. So non-interest bearing account. And then I guess the dollar amount in the bank account, well, you start with $2,500 initially.
Yeah, pretty much keep it there forever.
But it doesn't matter if you end up, if you're a little lazy and you forget to distribute all the money and you end up with 50 grand at the end of the year. That's not a problem, is it?
It is.
It is. Everything's a problem with you, Brian.
Because these rules are draconian and everything can become a problem. So a commission disc, anyway, a paper entity commission disc doesn't need $50,000 of working capital. And the IRS would hold that's not a qualified export account. Like having too much working capital in the disc will cause it to fail the other test, which is the 95 qualified export asset test. 2,500, an amount of cash equal to the capital stock is fine.
Sure.
Amounts above that start to, raise questions as to whether that's reasonable working capital or not. Given that the entity is a paper entity, it doesn't really have any expenses. Maybe some bank fees. That would be about it in most cases. It really doesn't need cash.
Yeah. Yeah. So maybe 3,000, 3,500 to account for some bank fees or.
Yeah, at most.
Yeah.
Getting about 5,000, it really starts to look questionable.
Okay. Oh, I just realized, I think in the initial assessment, there was a step we forgot, and that's, do they want to make it a buy-sell disc or a commission disc? What percentage of your clients are commission discs? Mine are 100%.
Like 99%.
Yeah. So we're just stepping ahead, assuming that it would be a commission disc.
Right. I mean, the only time you would really have a buy-sell disc is if you have a business where they're buying inventory from unrelated parties, and all the inventory is manufactured in the U.S. and all of it is export.
Yeah.
And I do have, like I said, 2 clients that have adopted that structure. One was a commission disc with an S corp, and they merged the S corp into the disc and just became an operating disc. And that's a little different than a buy-sell disc. I mean, an operating disc, people think of buy-sell disc and an operating disc are the same thing. They're really not. I mean, because you could have the equivalent of a commission disc, but have it be buy-sell, or it could buy product from its related exporter and then export it.
Okay.
It's possible. That fact pattern, I don't have any points in
Okay.
this pumps.
Okay. So we've got the election filed, and then at some point the IRS will send the taxpayer a letter approving the election, right?
Correct. That is true.
And then so we've got and usually it makes more sense to have the disc bank account at the same bank as the operating company, right?
It typically does, yes.
Yeah, and we'll get into that when we get further into the operation of the disc. Okay, so it's all set up and elections filed, election approved. So now certainly we're done with incorporation and governance matters, right?
No,
No.
not yet.
Okay.
You still have to make sure there's call it a related supplier agreement or disc commission, a supplier agreement in place between the exporting entity or entities and the disc itself. This document it's not required in the regulations, but it is recommended. It gives the related supplier a lot of flexibility in how it uses the disc. And if it uses the disc, and it gives it unilateral powers to decide not to use the disc. It also lays out, sort of legal boilerplate language about an intercompany agreement between the two businesses.
So you could just go to Chat GPT and have them spool up a one-page sales agent agreement. Is that right?
Maybe. I don't know. I haven't tried that because I don't want to teach Chat GPT how to do that. So every time you ask for the question, you teach it, right?
Sure.
No, it's a pretty specific agreement, and it has very specific provisions on it. And so somebody that knows what they're doing really needs to draft them.
Okay. Okay, so this is kind of pointing away from just having your general corporate attorney who's never heard of a disc do all that quote paperwork.
Yeah, I never recommend. I always recommend that a specialist do it, namely myself, take care of it.
Okay. Yeah, because you are, in addition to having an accounting background, you're also a tax attorney, correct?
Correct.
Okay.
Yeah, and some of the documents that need to be created, that can be done by a general corporate attorney, like bylaws, and do those as well. And or other organizational documents that aren't disc specific can really be done by any attorney. But really, it doesn't make sense to split that work up amongst different attorneys.
Sure.
All sort of be done by the same party to make sure that everything gets taken care
of. Okay.
And timely, because there's a 90-day window to get this, in my opinion, to get this all done.
Yeah, to coincide with the election filing.
Right, because typically I don't provide any of the documents, including the election, to the client until all these things are done.
Yeah. Oh, I see. Sure.
Because there's, they have to sign the disc election. Then there's all these other documents they need to sign and put in a minute book. And so rather than piecemeal, we just give it to them all at once.
Okay. So they've got their binder with all their signed documents, or a signed copy of the 4876A that was filed, a copy of the approval from the IRS. So now finally, are we ready to get started using our disc? Or is there more?
I want to back up to the mailing of the disc election.
Okay.
As you probably see in the news, things are changing at the Postal Service as far as postmarks and what they can be relied on as when something was considered filed. So they're not promising to postmark things that they drop them in the mail anymore.
Oh, really? Okay, I hadn't heard that.
Yeah. So it's recommended to go walk it to a counter and have it hand stamped with a postmark. Yeah. But more importantly, and unfortunately not everybody listens to this, send the form certified mail return receipt requested because many times the document is sent to Kansas City and they lose track.
Mhm.
Oh, we never got your disc collection. We can't process your disc return, whatever. And then there's proof that it was sent, and then they have to, find it, basically,
Okay.
or at least accept it. I mean, even if they ever find it.
Yeah.
But there's one other thing about the disc that we didn't talk about, and I'm reminded of it because something you asked me in passing last week, which is something about the year end of the disc. The year end of the disc must coincide with its principal shareholder. So if I have a C Corp, it's a fiscal year, but the owners of the disc are going to be individuals, that disc will be a calendar year disc,
Sure.
not be a fiscal year company. And, if it's owned by, let's say, an S Corp that has a fiscal year, then the disc will have a fiscal year. It must have the same year as its principal shares.
Okay. Yeah, good. Thanks for the reminder of that.
And sometimes the disc collection gets filled out incorrectly. Somebody assumes one thing, and then when a return is filed, the IRS, they don't know what to do.
Yeah. Yeah. Okay. All right. Now, finally, do we have a little bouncing baby disc to be delivered to its proud parents?
I think so.
Okay. 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 So
And it's
that's
usually about 3 to 5 months after it was formed.
okay.
That's when it started eating solids.
Okay. All right. So now we've got the disc set up, and I'm sorry, I keep touching my watch and it says the time. Apparently, it's time to just take off my watch. Okay. So let's just say that they have not yet set up the bank account. They've done everything else. Now it's time to set up the bank account. So they, call their local banker, they get it set up at the same bank so it can be on the same online banking platform. And then they fund it. And does it matter where the funding comes from for that bank account? Can they just say the company, I mean, can just anybody fund it? Say there's 3 shareholders, can just one shareholder write a check for $2,500 to fund it, or how does that all?
Well, there will be a subscription agreement that shows how much each shareholder owes for their shares, and each shareholder should pay for them.
Okay.
Can't just be one.
Okay. So we have the bank account set up. We're ready to go. And so now we're at the end of the year, or approaching the end of the year. Let's say we're in November of 2026. Anything we need to do before the end of the year?
For an accrual-based taxpayer, no. There's
Okay.
nothing to be to you right before the end.
And what about for a cash basis?
For a cash basis taxpayer, if we want a deduction in 2026, we need to pay the disc in 2026. So we need to gather information in order to estimate a disc commission for 2026 before the end of the year.
Okay. So cash basis, that's what we need to do by the end of the year. Accrual basis, no, don't need to do anything by the end of the year.
Don't need to. You have an option to, if you'd like to. If you want to have an idea of what the disc commission might be, or you actually want to pay it before the end of the year, but there's no requirement.
Yeah. And if you don't pay it by the end of the year, you get a deferral benefit.
Possibly.
Yeah. So say you did 100 million of exports and your commission was $20 million. You just get to defer that whole thing till the next year, right?
No.
No, Brian, all you say is no. Every good idea I have, you just say no.
You could defer 10% of it to the next year, because only the income related to 10 million of export sales can be deferred. and it'd be a little less than 10% because the disc wasn't there the whole year. So we'd have to prorate that 10 million for the number of days the disc existed. And then some sliver can be deferred, but the rest of it is going to be taxed to the shareholders as a deemed dividend.
In the current year. Okay.
Then not taxed when physically distributed in the following.
Okay. So we have an accrual taxpayer. We get into to 2027, and let's say they're extending their corporate return, and they're planning to file that in August of 27. So we're done. We don't have anything else to do before August, right?
That's not true either.
Brian, you're killing me.
Yeah, well, I mean, it depends. If nothing was done before the end of the year, then something needs to be done within the first 60 days after. The accrual-based taxpayer, or let's say the cash-basis taxpayer says, "I don't care if I get my deduction next year, so I'm not going to pay anything this year." Something needs to be paid to that disc within 60 days of the end of the year.
So is this one of those things like the sales agent agreement that's just recommended?
No, this is required.
Required? Okay.
Yeah, this is required. This is one of the hot buttons the IRS will try to use to disqualify your disc.
Okay.
So the disc accrues a receivable at the end of the year, even though he doesn't know the amount at the end of the year. For disc purposes, it books in it that an accrual for the income at the end of the year. That accrual or the receivable is only a qualified export asset if the payment rules around that receivable are satisfied.
Okay.
Okay.
Rules. There's always rules.
Yeah, it's very draconian. You have a 60-day rule and a 90-day rule. 60-day rule says you must pay a reasonable estimate of the disc commission to the disc within 60 days of the end of the year in cash or property.
Okay.
So it could be cash, it could be a note.
And reasonable is just any old amount. You just put your finger in the air and go, I think $100 is reasonable.
Again, that's not the case. There is a safe harbor for what is reasonable, and that safe harbor is at least 50% of the final commission amount.
But how do you know that in February?
If
you're not preparing the corporate.
You have to try to compute an estimate before the end of February.
And you have to nail it exactly at 50%. So if you think the commission is going to be $1,217,412, you need to pay exactly 50% of that.
At least.
Oh, at least. So you could pay more.
You could pay more. And we always recommend maybe paying 75 to 80%.
Okay.
Because if you pay whatever you pay, 2 times that amount is going to be your one. So if you thought it was going to be $1 million, you paid 500,000. It turns out to be $1,500,000. Too bad. So sad. You only paid 500,000. You're capped at $1 million.
Okay. I mean, that's the safe harbor. I suppose there might be circumstances where one could argue that maybe the first year of the disc, and they
you can argue it. You can try to argue it, but there's no guarantee that the IRS will accept any of the arguments. And the private letter rulings that exist from the 1970s would imply that they're really not going to accept just about any rationale that they reasonable other than that 50% bright line safe harbor.
Okay. So you make the payment.
You make that payment, and
can't you just book a journal entry? Do you actually have to really move the money? That sounds like a hassle.
I mean, in general, you have to either create a note or move cash.
Okay.
Okay.
But that might be a lot of money though. Like what if it's like $2 million and the company only has $1 million in the bank?
They could use the same capital multiple times.
Oh, okay.
And round trip the money as many times as they need to, or like I said, use the promissory note.
Okay.
short-term promissory note to satisfy that requirement. Because it does say cash or property.
Okay.
Um,
So we get through February. We've made our 60-day payment. We've we instead of doing 50%, we did about 80% of what we thought it was going to be to give us some cushion. And now we can go take a vacation till the corporate return's ready.
yeah, I think so.
Okay.
I think so.
Okay. So it's time to now. So it's time now. If they extend that corporate return, I guess they're going to have to extend the disc return as well.
Well, the disc return is due September 15th as a matter of course.
Oh, that's
there are no extensions. So really, as far as the disc and its compliance goes, once you make that 60-day payment, there's really not much you can or should do or are able to do until the related entity's tax return is prepared. So a lot of times they'll say, well, that's not going to be done until September 15th. And we have to have a discussion about how that doesn't work because the disc return has to be done by September 15th. But in order to do the disc return, you need basically a completed and related supplier return. So then we have to work backwards from September 15th to figure out like when's the latest they can have that other return done in order to get the disc return done. Now, that's relatively easy in the pass-through context because all those pass-through returns are also due September 15th for extension.
Sure.
Whereas a C corporation, it's not so easy because the extended due date for a C corporation, if it's a calendar year, is October 15th.
Mm-hmm.
So it may be that you have to file a disc return with a made-up number on time and then amend it after September 15th. I've done that a number of times.
Okay. So that makes sense. So
because as good as CPAs are, they're deadline driven. So if a return is due October 15th, they're unlikely to have it done by the end of August.
Yeah. Okay. So it's time to file the disc return. I assume the CPA firm probably has that disc return in their standard tax software with all the other forms. So you just have the CPA go ahead and prepare the disc return. I've looked at it. It's a short return. It's like 10 pages long. So you just go ahead and have the CPA prepare the disc return. Then bing, bam, boom, you're done.
Can you do that?
Okay. Is there a drawback to doing that?
Yeah, it'd probably be wrong.
Okay. Why do you say that? Now, remember, Brian, we have a lot of CPAs who we have very good relationships with that we share clients, saying that they're probably going to do it wrong. I mean, heck, I don't really want to annoy all my great CPAs we work with.
Well, yeah, but it's just a fact. It'll probably be wrong because they might see one or two or three a year. They think they know what all the different terms on the disc return mean, but they're not as familiar with that as they are with an S corp return or a partnership return or 1120. So they do what they think is right, and it may be right, it may not be right. So again, in my opinion, you want a specialist preparing the disc return.
Okay.
Okay, because we know exactly how it's supposed to be filled out. And then if the calculation is done on a transaction by transaction basis, there's this Schedule P that gets attached to the return. Well, if you don't do a T by T, there's one Schedule P. If you do a T by T, there could be thousands. So I don't think CPAs and their software are equipped to complete thousands of Schedule Ps and attach them to the disc.
No, good point. And you're getting your enthusiasm to get to T by T you got a little ahead of me because I was going to ask. So client says, hey, we have a disc, our accounting department's busy. What's just the bare minimum of information we need to send to you? What's the bare minimum?
Bare minimum would be qualified export sales.
They just need to send you a number.
Yes.
Then you take that number, and how hard can it be? Right? You just take that number.
It's not necessarily that hard at that point.
Yeah.
But you say the profit on those sales is the average profit of the company and taxable profit. And you compute the disc commission, go through the Schedule P and compute the disc commission and pick the higher of the two numbers, then you compute.
So you would just need like the final draft corporate return and that total export number, dollar amount for the year. And that's really all you need to
That's
need.
the bare bones. That's the bare bones. Yeah.
Okay. And that's what some people would call the standard calculation or a simple calculation.
I call it simple.
Okay. And that's also known as the 4%, 50% calculation in some circles, right? How does that work?
Well, it's also known as the safe harbor calculation in certain circles.
Back to that safe harbor again.
Yeah, but that's actually not a safe harbor. So that's why I bring that up. People say, "Oh, that's the safe harbor calculation." I'm like, no, it's not. It's just the calculation. There's nothing safe harbor about it.
Okay.
Okay. It's just the rules that are found in the code and regs for computing a disc commission. But they're the two predominant methods, 4% of sales and the 50% of net profit.
You just cherry pick whichever one works better.
Yeah, but the 4% method has limitations. So
more limitations, Brian. Why can't this just be simple? You said it was the simple calculation, and now you're already telling me there's inherent complexity.
Even if it's simple, it's not totally simple.
Okay.
Okay. So and I've seen this done wrong millions, well, not millions, hundreds of times. And I can say it is hundreds of times. Client computes the 4% method just like choosing 4% of sales. They don't look at what their net income is on the activity. They just say, oh, I'm allowed to use 4% of sales. The limit there is you cannot create a loss. There's something called the no loss rules. You can't create a loss on the disc commission if one doesn't already exist. So if the profit on the sales are 2% of sales, you can't take 4% of sales. You're limited to 2% of sales. And if, for example, you have a loss in the company, you're limited to 0. But I've seen situations where that's completely ignored. And they improperly computed disc commission of 4% of sales when it should have been something less or possibly 0.
Okay. So more complexity, but the good news, that's the extent of the complexity. One Schedule P, 4%, 50%, make sure you don't create a loss. Now we're all done. What dusted and delivered. We're good to go. They've maximized their disc commission, right? And we're all done. They have a nice 10-page return to send to the IRS, which, by the way, can they file that electronically, that return?
Fortunately, there are no provisions for electronic filing of the disc return.
What is this, the 1970s or something?
Pretty much.
Okay.
With regard to the disc, yeah, and I had some other forms, yeah. But the benefit of that, here I'll give you a benefit. The benefit of the fact that you must file a paper return is they can have an electronic signature. It doesn't have to have a wet signature.
Okay.
So you could theoretically, for example, send your client the return using DocuSign, have them sign it, you print it, you file.
Okay. So, but now we're finally done. It's signed, it's done. And they say, boy, thank you very much, Brian. Your team did a great job. And boy, I really appreciate, we had 10 million of exports. We have all kinds of variability in our profit margins. But thank you very much. You created the amazing $400,000, or you calculated the $400,000 disc. Commission, thank you very much. I couldn't imagine you went above and beyond. I couldn't imagine you could have done anything more. And then what do you say? Do you graciously say, "Oh, you're welcome. It was our pleasure"?
I would graciously say, we've just computed your minimum disc commission,
Okay.
not your maximum, because you have
Let me guess. Let me guess. There's more complexity coming.
or complexity, which relies on more data being pulled from the client's records to allow for a calculation of the disc commission at a more detailed level, ideally
Okay.
at a line item by invoice level.
Line item. That sounds like a lot of work.
It can be.
What if the client says, "Our accounting department's busy. Sounds like we're going to have to spend weeks gathering all this data for you. It's just, we're too busy. It's not worth it." What do you say then?
I almost can guarantee you it will be worth it, because
Okay.
looking at the detail is likely to cause that disc commission to be anywhere from 50 to 400% higher than what it otherwise would have been. Unfortunately, in that first year, since you've already filed with a certain number, you're limited to 2 times what you paid in that 60-day window. But going forward, there's no limit.
Okay.
Whatever we compute to be your disc commission. So different industries have different amount of variability on our and transaction by transaction calculations have different impacts depending upon the industry, the profitability of the business, how many products they have, who they sell to. But it can vary. But I'll give you an example of one that worked on recently, where company had 100 million of export sales. They took 4% of sales, and they've been taking 4% of sales year after year after year after year after year.
Okay.
They brought us in like 3 weeks before the disc returns,
Okay.
and we went through the calculations, and we actually calculated 17 million
As opposed to 4 million.
as opposed to 4.
Yikes. That's a big difference.
It's a huge difference. And fortunately, they were, they were very pleased with the result. And so now, on a going forward basis, we're not doing 4% of sales.
Okay. But you still have this. But if they were able to get a $17 million commission, then that means their corporate taxable income must have been at least 17 million, because didn't I hear you say the disc commission cannot cause a loss?
It cannot cause a loss at the level at which you're computing the commission. So there's
You're killing me, Brian. Just more complexity.
Yeah, well, it's a very complex area. There's no overall no loss. Like if you can, as long as you're meeting the rules as they're written, you can cause your entity to go into a loss position. Now, this particular instance, it did not do that, but you could do that.
Okay.
And then if you get into a loss position, there are other non-disc complexities that come into play that impact whether you want to maximize the loss in that entity or you want to target a particular loss in that entity. And that's not something that we get involved with, but we're certainly sensitive to.
Sure. And so you're saying for this client, even though I've heard some people say you've got the simple calc and then the hard calc. And so you wonder, why would anyone do the hard calc? Well, it's because their commission went from 4 million to 17 million, which saved them hundreds of thousands of dollars, created hundreds or millions of dollars of additional tax savings.
Right.
Okay.
And by the way, after the first conversation we had with them, they said, "Oh yeah, this is not something we can do." The accounting department said, "This is not something we can do." Then the owner said, "This is something you're going to."
It's funny how that works. Okay, so, and then I'm guessing this extra work, you probably gonna have to create another Schedule P or two. So now the disk return, instead of being 10 pages, is what, 20 pages? Is that kind of a typical page count?
No, it could be
No,
there are thousands of pages.
thousands. I mean,
But
Brian, a ream of paper is 500. So thousands would be reams of paper.
yes, I've had some returns that have like 15 binders of paper.
Yikes.
Yeah, just goes in a big box, and I'm sure the IRS types all those Schedule Ps into their.
I'm sure they do. Okay, so the return gets filed. So the return's ready. You take that box, you just slap you print off a postal label online, drop it off at the post office, and you're done, right? You just give it to your carrier, your house, or whatever.
Well, you can send it via FedEx. You can send it via UPS, and then actually, in some ways, I think that might be better these days than the postal service.
And why do you have to do that? Can't you just slap? I mean, if you have your 15 binders, couldn't you just put 100 stamps, on the box and ship it in? Because they'll get it, right? I mean, it's not like they're going to lose it or anything.
They might. They could very well lose it. And you definitely want proof of delivery, and you want proof of mailing. So again, it's a certified mail if you're using the postal service, or if you're using a private carrier like FedEx, you get all that documentation about when it was shipped and when it was delivered.
Okay. Well, now at least we're finally done, right? You ship it off. The CPA pulls the numbers from the disk return, puts it on the corporate and shareholder returns. Now we're done. It's gone to the IRS. We never have to think about it again, right?
I'm not sure if that's a trick question or not, but in some
Well,
ways that could be true. Right?
Yeah, but I guess you could get audited, right?
And get audited by an agent who has no idea what they're doing, which is typically the case.
So that's why you want your CPA defending you in that case, because then it's like the blind leading the blind.
No, I think it's better if someone with sight is involved. So again, the specialist who did the disk work should represent the taxpayer or be involved with the representation of the taxpayer in the case of the audit.
Okay.
And the CPA should be involved.
Okay.
Really, what's really in question is the deduction on that entity's tax return. The disk itself doesn't pay tax, so they rarely audit a disk. Quote.
Okay. So if I break it down, to do it really right, you need a specialist to guide you on the initial structure of the disk. You need another specialist to set up the disk. You need another specialist to do all the paperwork, make sure the document's correct. Another specialist to prepare the return, and then another specialist to defend you. So is that about right? So you need like 5 different people to make sure everything's done right. Brian, isn't there some way that you could just have one person that could just do it all for you and be done with it?
Well, of course.
Okay. Finally, I get a simple answer.
Right. So if you engage a disk specialist, that specialist should be able to do all.
Okay.
Okay. Now, not every disk specialist is created equally.
Sure.
So, I brought up during our conversation that there are some non-disk things that can also add complexity to the situation. Not every disk specialist will be sensitive to those things. Not every disk specialist will understand those things. So the benefits that like our organization brings is that, well, at least myself in particular, I didn't always just do IC disk work. I have a well-rounded knowledge of all of the tax flow. And so I am sensitive to non-disk things. For example, another example, company has a lot of export sales. You would think it's a no-brainer. They should have a disk. They should use the disk. They should want to convert that ordinary income to qualified dividend income. Well, what if the S corp is owned by an resident? What if there are passive shareholders? all of those things impact whether the disc commission actually helps or hurts their tax situation. And I would venture a guess that, if you went out and Googled, IC disc specialist, you would find a handful at most that understand all that stuff and how it all interplays together, as opposed to the multitude of those that won't understand any of it.
Okay.
So I think a disc specialist that is sensitive to all the other tax rules is definitely something that is valuable.
And you probably want someone with some experience who's done maybe, a dozen disc returns in their career, maybe 50 if they're really good. Like how many have we done organization wide? Probably
10,000.
10,000. Well, that's a lot more than 50.
Yes, over the years, it's probably close to that number. And we've probably claimed billions of dollars of disc deductions, and saved clients hundreds of millions of dollars of tax. And I'm proud to say that every dollar we've ever claimed, we've sustained.
Okay. So
never had an adjustment from the IRS.
Well, that sounds like a good record. So bottom line,
that's the best you can come up with, is a good record. I'd say it's
well, I didn't want to say a perfect record, so I didn't want to jinx
no,
it.
but it's pretty outstanding record.
Yeah, it's an impressive record.
Because there are also disc providers out there that say, well,
it's the Wild West.
The Wild West, the IRS doesn't really understand it, so let's be as aggressive as possible. And that's not the way we approach things.
Yeah. Wow. Well, this has been a lot. So really, it's that simple. So the person who wants to just do all this themselves, we've laid out the whole playbook for them.
Yeah. The only simple thing they have to do is call us.
There you go. That is it. Yeah. And the other thing, not only are you the Bob Hope, you now have moved from number 2 to number 1 for the most experienced IC disc guy I know, now that Neil Block is retired.
Well, I don't know if that's a plus or not, or I'll take it. It just means I've been doing it a long time myself. So
yeah, Neil was, I think, my first or second guest. And I was just happy because his billing rate back then was like $1,500 an hour. I was just glad I didn't get a bill a month later for him being on the podcast. But he did it for exactly 50 years at one firm, Baker and McKenzie in Chicago. He had one office, one phone number, like the whole 50 years.
there.
That is something you don't see much anymore.
Definitely not. No, it's very cool. And Neil is a very intelligent, savvy guy.
Yeah, that is for sure. Well, Brian, anything else that we didn't cover that you can think of?
Can't think of anything. I think we covered a great deal here.
Okay.
Yeah.
Well,
We omitted.
Well, great. Well, hey, thank you so much for your time. Really appreciate it. And I'll let you get back to your exploration of your yard there.
Yeah, I feel like it's funny I shot the kids.
I know. Well, hey, well, again, thanks again, Brian. We all appreciate your time.
You're welcome. Have a good day.
There we have it. Another great episode. Thanks for listening in. If you want to continue the conversation, go to icdiscshow.com. That's ic-discshow.com. And we have additional information on the podcast, archived episodes, as well as a button to be a guest. So if you'd like to be a guest, go select that and fill out the information, and we'd love to have you on the show. So that's it. We'll be back next time with another episode of the IC Disc Show.